flash manufacturing PMI, which is going to be released in less than 15 minutes. So as usually, I'm going to start with the fundamental part of the discussion, and then Alexander and Thomas are going to continue with the technical part of it. So, first of all, let me just put the first chart on the whiteboard, and we can start. So German manufacturing PMI is going to be released for the month of March, and it is released monthly around 3 weeks into the current month. And this is a level of diffusion index based on surveyed purchasing managers in the manufacturing industry. Of course, above 50 indicates industry expansion, while below this number indicates contraction. And there are two versions of this report. Today we are going to discuss the flash manufacturing PMI, which is of much higher importance than the other one. So, yes, today we already had data on French flash manufacturing PMI at 7 GMT, which turned out to be worse than expected at 50.3 points instead of 51.5. So let us see what happens with the German one. Yes, and getting back to German flash manufacturing PMI, the average consensus forecast suggests us, this is the one of Bloomberg poll, suggests us that the reading will be slightly higher this month at 53.8, but let us have a look at the whole, at the top 10 forecasts and at the summary so that we can have a better view on what is going on. So yes, we do see that the median estimate is at 53.8. However, the range of forecasts is pretty wide this time. It's the highest estimate is at 54.5, but the lowest is at 52.6, meaning that we could still have either higher than expected or worse than expected data. If we look at the top 10 forecasts, ranked according to Bloomberg, then we see rather positive estimates for this month. But let us see how it turns out. One more thing we can do is to have a look at what happens over the previous months. So here we can see a chart. Let me just make it a little bit smaller. Yes, and we can see that the reading has actually been slightly declining over the last couple of months, as it's reached 56.5 points in January and then touched actually the lowest level in 4 months. In March, when the reading was at 53.7, as actually the economists had forecasted the reading to be at the German manufacturing PMI to increase to 54.7. And there's also one economist at Market who said last month that the data signals that there might be still a few obstacles on the path of recovery. And judging from the reading of France, maybe there are some obstacles and maybe still worse than expected data could come out. But you never know. However, yes, one more thing I want to do with you is to show you the Dukascopy fundamental analysis contest results, where you are welcome to take part in. And we ask our traders what impact do they see this particular economic event having on the Euro-USD currency pair. And here we can see that traders see this event having a rather bullish impact on the euro currency, with almost 64 votes for bullish. So yes, I think that was all from my side, and now I will let Alexander and Thomas to continue with positive and negative market surprise strategy and then market reaction. So guys, you're welcome to start.
Thank you, Maya. Hello, guys. So today I will be discussing the negative surprise trading strategy, which will be based, as you can see, on the most traded currency pair. And so, first of all, as Maya already mentioned, we already had a release of French manufacturing PMI, which came worse than expected. And as you can see, the data has provoked a massive sell-off of the single currency, and during the last 20 minutes, the pair has fallen more than 23 pips. So Perhaps markets have already priced in the potential negative effect of the German PMI as well. And if I recall correctly, during the last several weeks, we had a bunch of disappointing data from German economy. So therefore, there's a rather high possibility that today's report will surprise markets to the downside as well, even though the consensus forecast stands for the improvement. Regarding the trading strategy itself, actually we have revised it several times, once again due to the release of French manufacturing PMI data, and currently you see that the stop loss stands at 132.12, right at the level of 4-hour pivot. However, I guess it will be worth adjusting it one more time and placing it around at the daily pivot and 4-hour support at 138.05, 7 pips even lower from the previous level. And regarding the take profit, so you see that currently it stands at 137.93, right at the level of 4-hour support. However, as you can see, this is just less than 10 pips from the current market price. And in case we suggest that markets have already priced in the potential impact, that, then it will be quite reasonable. However, if someone believes that German data will be extremely negative, that, then the next major stop for the short traders is located at daily and 4-hour support at 137.86, and that will be additional 7 pips from the previous take profit. So once again, the recommended stop loss is placed at 4-hour pivot at 138.07, and the take profit can be placed at 137.93. So regarding the market sentiment, as always, as you can see, it's still extremely bearish, as more than 65% of traders are holding short positions. Moreover, we see that this indicator echoes with market sentiment from 3 other market participants, including Oanda, Saxo Bank, and Dailefix. Therefore, traders are quite unanimous in their view on the most traded currency pair. And what is more important, here we see that vast majority of pending orders in a 50 and 100 pips range are placed to sell the pair, meaning that traders expect the single currency to depreciate versus the greenback even in a longer term. However, as you can see, aggregate technical indicators are sending buy signals, so it's a completely different situation right here. And yeah, as you can see, vast majority of them are suggesting that the pair will still appreciate in a short, medium, and even long-term perspective. So everything will depend on today's data and tomorrow's Mario Draghi speech. Well, one more thing to show you, that's hourly chart on the Euro-USD, and here you see that the pair has been trading in boundaries of the descending triangle pattern since April 4. However, recent volatility, due to the recent volatility, the pair managed to breach the upper trend line. However, once again, due to disappointing data from France, the pair has moved back into pattern's boundaries. And as already mentioned, the level of 137.93, that's daily support and 4-hour support, and as well that's the support line of the triangle pattern. So that will be a key level for short traders in the nearest future. Yep, I guess that will be pretty much from my side. Yep, so the floor is all yours, Thomas, so welcome.
Very much, Alexander. Hi, everyone. I hope you're having a great day. So I'll be doing a positive surprise trading strategy on the Euro Great Britain pound. My screen sharing, yeah, here it loads. So over here you can see 1-minute chart on the Euro Great Britain pound. And just in a second, I will put a slide explaining why I chose this currency pair. Of course, first of all, important role played by the fact that it's one of the more traded and more, let's say, it's not the major, but more important currency pair in the market. Market sentiment is mildly bullish. 53% of traders are being long on the pair. However, this number was extracted right before the release of the French data. So if I recall correctly, we're seeing slightly stronger bullish outlook from the market participants. And however, at least 65% of pending orders in 100 to 100, from 50 to 100 pips, that should be here, are set to go long on the pair. So in case we'll see volatility on the pair during the release of the data, there will also be additional push for the pair to go higher. And besides that, overall attitude towards the Great Britain pound is actually rather bearish, as it's being sold in 72% of the pair of the cases, so that adds additional support, or let's say thanks to the euro position. And as we can see in the technical indicators, the most of the short-term technicals on aggregate maybe give a neutral outlook. However, on 30 minutes to 1 hour horizon, we can see that most of the trending indicators suggest a rather strong bullish trend present. And I would say the fact that RSI and stochastic give neutral outlook actually works in our favor, as we won't see this overreaction in a sense due to the pair being oversold or overbought. So we could expect pretty much a pure reaction from the data release. Now, trading strategy itself is to enter long position at the current market price. I would say when the pair, well, the peaks, the dips below the 200 bar simple moving average, effectively 200 minute simple moving average, this granular line right over here, are highly favorable for that. And as long as pair remains below the 4-hour 4-hour pivot R2 at 0.8216. Zoom in a little bit, maybe less. Below the 4-hour R2, actually, we are really in a good position. So we can see the pair actually approaching the stop loss, which was set at the 4-hour R1 at 1.82128, which was slightly higher than the pair. Okay, so we're seeing a market reaction, and as far as I understand, it was 6 pips and approaching the possible take profit, immediate take profit, which was set at the 4-hour R3, slightly below the daily high. However, I really doubt that the pair would be able to push above the 0.8220 with confidence. So I guess we could wrap up and close the positions for the time being, as the pair is inching up higher, but we can see it is falling short a little bit from the 4-hour R3. So what do we see from the data? Manufacturing PMI is by 0.3 better. Services PMI, don't see as far as I understand, all of the actual numbers came out better than expected, which explains actually the euro reaction. Of course, as for Germany, actually, we could be thinking that we should see a little bit stronger, but I guess there's still the data release from the French side actually playing a role here, and it might be that actually we'll see the pair consolidating slightly above the 0.8220 for the time being. As I mentioned, 4-hour R3 in general, daily high right over here, could be perceived as a medium term, let's say 30 to 1 hour target, but again, we should be very cautious due to the previous data release of the French. So I guess that will be all from my side for the time being. I will leave the screenshot of what is going on in the market on the whiteboard. Maybe you'll be able to use it in your future analysis or in general. And I guess that will be all from my side. I hope you found this useful, and I give floor back to you, Maya, to wrap it up.
Okay. Okay, yes, I am back. So thank you very much for watching us. This was the economic data release on German manufacturing PMI. In the meantime, I encourage you to stay tuned to our community member webinars, and don't forget to join our Dukascopy research webinar at 12 GMT as well. So that's all for now. Have a great day and see you later. And Aslam, you can continue your webinar.